Buenas tardes a todo el mundo. Es un placer para mí moderar esta mesa redonda donde vamos a hablar sobre la adopción institucional de Ethereum, que están haciendo las grandes entidades financieras, las grandes corporaciones y sobre todo pues cuáles son los retos, ¿no? Vamos a hacer el panel en inglés, yo os iré haciendo un poco las preguntas en ambos idiomas y nuestros speakers irán contestando en inglés. Welcome, both of you, to this panel. It's like a pleasure to have the Ethereum Foundation here in this event talking about the institutional adoption of such a big infrastructure as Ethereum is. So first of all, I think that we all know about Ethereum, but maybe we are not that aware about the institutional team inside the Ethereum Foundation. So if you can briefly introduce yourselves and explain to us what you are doing in the space, how are you helping companies to get on board into Ethereum?
Testing, okay. Yeah, no, it's great to be here. Thanks everyone for coming. For those that don't know, we're here in Argentina next week for DevConnect as well, which is our annual conference, so it's fantastic to be here. I'm Matthew Dawson, part of the enterprise team, and when it comes to working with institutions in the space, I think most people appreciate that Ethereum is permissionless, anyone can come and build, but that doesn't mean that it's necessarily simple or that institutions don't want someone there to talk to when they're going to build on Ethereum. So we can help to facilitate across multiple use cases the correct introductions to protocol teams within the ecosystem, to layer 2 blockchains on top of Ethereum, and to provide that support and accelerate institutional roadmaps and adoption of Ethereum.
Hello, everybody. Good to meet you all today. Thanks, Paula, for hosting us. I think from our side, I guess I've been working in the staking space for quite a long time within the Ethereum ecosystem, and throughout that time, I might have met 3 or 4 people from the Ethereum Foundation, maybe in 5 years, which is kind of crazy. And I think when Tomasz came on board as a co-executive director in March, he made it clear that he wants the Ethereum Foundation to be a lot more proactive in how they engage with the ecosystem. So with that came a couple of changes on the protocol side. You can think of the Ethereum Foundation as split down the middle with protocol, which is technical developers on one side, focusing on the tech side, research, and then on the other side is ecosystem development, where Matthew and I sit on the enterprise team. So EcoDev went through a restructuring around 4 months ago now, and I think there's 15 different teams. They focus on enterprise and institutions, academic, policy, apps, and there's around 4 people per team focused very specifically in a certain area. So like Matthew mentioned, we're working with a lot of financial institutions at the moment because that's where we're seeing demand from the market, whether it's on L2s or stable coins or tokenized deposits or whatever it looks like, we're there to support them across the journey.
Just taking that late comment regarding some of the institutional use cases, right, like tokenized deposits, stable coins, they were talking the previous panel about stable coins and payments, settlements, and all these financial use cases. How are you seeing the state of all the institutional use cases? Are you seeing a prominent use case that institutions are really going into and that they are using Ethereum to move forward?
Yeah, of course, I think that this year was the year of the stablecoin. It continues to be, but multiple other use cases are catching up and will complement each other. So probably the next big one will be tokenized real-world assets. We've already seen that with companies like BlackRock and their Biddle Fund, Franklin Templeton, and many others. Really, that started as what is, I would say, like non-native tokenization. So it's great for distribution, but we're going to see a move more and more towards native tokenization, where more of the middle and back office of financial institutions are programmed into smart contracts and are verifiable on the blockchain. And that's where we really see like the step change in efficiency of financial institutions. That couples nicely with the stablecoins, because at the moment stablecoins are really useful for payment, but they'll become more and more used for the cash leg of settlement and settlement against tokenized real-world assets. So lots of the use cases are complementary as well.
I would just add maybe L2s as well, like a customized L2 environment is extremely attractive actually to a lot of financial institutions. Like if you think about Coinbase, who's probably the world's most sophisticated custodian and exchange, like they opted to build an L2 on Ethereum base, which has I think around $150 million of revenue per year. I think 89 or 90% margins on those, so it's extremely attractive. And you see more and more L1s actually pivoting to become L2s, like the likes of Ronin or Celo, because the operational costs dramatically decreased. I think for both of those it was around 98% or 99% decrease in operational costs, so they don't have to run their own validators and they inherit all of the benefits of just Ethereum security. So I think there will be more and more specialized L2s for financial institutions who already have the distribution, but they want to kind of customize their environment to be permissioned or compliant or whatever they want it to be.
Can you share with us like a specific or concrete use case that like you think that it has been very positive in terms of results that a financial institutions, for example, is doing on the Ethereum mainnet?
Yeah, so I think mainnet, the big thing that we see is essentially like low-risk DeFi, very safe borrowing. So for instance, if you look at Aave and their new Horizon product, that allows what we've seen Aave been so successful at over the last few years, now come to permissioned assets. And so making those tokenized real-world assets more productive and putting them to use on chain is very beneficial for institutions. And then if you look at something like a layer 2, like David mentioned, Base and their partnership with Shopify, where Shopify merchants can now integrate payments on Base and USDC. So depending on the use case, depending on kind of the speed of transactions and requirements, depends on where it lands on layer 1 and layer 2, I would say.
That was one of the topics, right? Like we wanted to discuss this thing about scalability. We have seen a lot of different developments in the last years. We have seen Ethereum 2.0. We have seen all the layer 2s, different privacy solutions, the roll-ups, and so on. So how are you seeing the space in terms of scalability? I mean, are we going to an environment that we are going to have like very few dominant blockchains? Are you seeing an environment that it's plenty of different, of thousands, of hundreds of blockchains, and we will be able like to operate with them seamlessly? Are you seeing more going into scalability solutions as layer 2s? Like how are you seeing the aspect of the scalability like from here to 5 years, for example? Yeah,
I think that Ethereum has 3 key focuses at the moment from a technical perspective, and that is to scale the layer 1, scale the layer 2, which is through blobs, and to increase user experience or improve user experience. So that touches on multiple of those things. So scale is very important. But historically, the scalability trilemma meant that if you wanted to increase transaction throughput, you would essentially be making a trade-off between throughput and decentralization. So Ethereum's stance was always not to compromise on decentralization because that's what provides it with the values of credible neutrality, resilience, etc. That's why layer 2s are so important, because they allow you to scale the Ethereum ecosystem with the interoperability between layer 2s and between layer 2s and the layer 1 without compromising, giving you that scale whilst inheriting the security of the layer 1 blockchain. So that's why Ethereum had the layer 2 roadmap and continues to do that whilst scaling layer 1, 2, and improving UX.
I think just back to your point too around will there be consolidation. I think we're already in a fairly concentrated ecosystem right now. I think in terms of stablecoins, 60% of stablecoin supply is on Ethereum mainnet. I think if you add on L2s, it gets up to around 65 or 70%. I think Ethereum's DeFi ecosystem is 7.5x the next largest ecosystem. And just generally, liquidity begets liquidity. And it's going to, I think it will continue happening that way. I think there will be new entrants to the markets, and it will be interesting to see how they play out. But I'm generally seeing more and more different ecosystem participants becoming more interested in maybe becoming an L2 or maybe becoming an app, all within the Ethereum ecosystem as a whole.
I guess I would just add, one question that we often get is around fragmentation and liquidity fragmentation. If you have all of these layer 2s, if you have all of these L1s, what happens to liquidity? It's constantly fragmented. But with the improvements in layer 2 technology and with the improvements in UX, so the interoperability between the chains, we now see things like what ZK Sync announced just a week or two ago, where because the interoperability is becoming so efficient, you can leverage the liquidity of the layer 1 where those assets are most secure, but do your DeFi activity on a layer 2 where transactions are quicker and cheaper. So we are moving iteratively towards having the most secure and efficient system between layer 1 and 2.
And what's your opinion on the layer 3 as well? I mean, because some of the financial institutions, right, they are launching pilots that it's like using this public blockchain infrastructure but having like a private environment as it can be like a layer 3. So what's your opinion on that?
Yeah, I think there's some use cases where a layer 3 makes sense. Most of the time a layer 2 will suffice. But if you want to, like David mentioned, have a customized corporate or public permissioned environment on top of a layer 2 where you have that scalability. So for instance, let's take Deutsche Bank. Deutsche Bank may want a layer 2, which they already have, but they might also want some additional, let's call them environments in a traditional sense, where they can customize them, but they want it still within their like locus of control and their like domain. Then they can have those as separate layer 3s within on top of their layer 2.
I think as well, the only other thing that I would add is that the world will go permissionless and it will continue going permissionless. It's what has happened previously with intranet versus internet. How many people here use the internet every day? There's network effects, there's scale, that comes generally with open permissionless environments. And I think all of us at the EF believe that that will continue to be the case. You can have permissioned environments on permissionless networks, and that's probably where the world will go. But I think the days of private chains or walled gardens, yeah, they're coming to an end, and maybe people are working on them, or maybe people are thinking about it, but generally most of those haven't gained a significant amount of scale, and they lack basically interoperability or network effects that the likes of an Ethereum has.
I think that apart from like scalability and interoperability that have been like the two main topics like in the past years, the last challenge would be like the regulation, right? I've been working, from those that don't know me, 5 years in the crypto department at Banco Santander, one financial institution, and one of the problems that we were facing when it came like to deploy, for example, a use case in a public blockchain is the recognition of that public blockchain as a valid infrastructure for the regulator. So I can launch a use case and it can be recognized as a valid infrastructure to do so. So how are you seeing that in the space? Is there any country that already allows or recognizes Ethereum as a valid infrastructure, and how you are seeing that evolving?
It's getting there. I'm not a lawyer and I'm not a policymaker, and I'm definitely not an expert in every detail from every region or jurisdiction. We are seeing a lot of traction though. Matthew and I were in Hong Kong last week, Vienna the week a couple of days ago, and now in Argentina. And all of those areas we met regulators or financial institutions that are looking at permissionless networks. I think the US specifically has took a 180-degree change in terms of where they were under the previous administration to where they're at right now. That's really interesting to see, and I think that you can kind of go to different conferences in the US and you hear that the regulators are actually telling the financial institutions to start innovating and start actually working on these types of products. So I think in APAC, in Hong Kong is moving particularly quickly. The US is starting to move forward now with the Clarity Act and Genius. And then I think the likes of Switzerland or other European countries have been relatively forward thinking, the likes of France as well. But there's a lot of work to do and a lot of education to do. And that's another part of what we're working on generally.
I think just to add, I would say that geographies have borders, but of course blockchains don't, and that's one of the challenges we will always run up against. But when it comes to evaluating blockchains as financial market infrastructure, regulators are going to be looking at a few very clear things, which is how long has the network been reliable and up, and now Ethereum is over 10 years of consistent uptime ever since it was started in 2015. It's going to look at how decentralized and therefore resilient is it. So that's how many nodes are there, how geographically distributed are they, and how many validators are on those nodes, and obviously Ethereum leads in that domain. So really, the regulation, I believe, will come, but the technical teams at the EF are focused on making sure that it's the most reliable infrastructure for the next wave of finance on chain.
So now we are having like 2 minutes left. Let's wrap up the panel. We have been talking about the current state of Ethereum. We've been talking about the challenges and how we are facing that through the different years. So let's talk like a little bit about the future. So what trends are you expecting in the next 2-3 years? What do you think that it's going to happen in terms of institutional adoption with regards to Ethereum?
So I'm not an expert and I can't tell the future, but I do like looking at different analysts that are in the space. So when we were in Hong Kong, we actually met with a guy called Jeff Kendrick, who's the head of research at Standard Chartered, and he had just put out a piece saying that the on-chain RWA market will grow from 35 billion to 2 trillion by 2028. So that's one really interesting piece on on-chain tokenization. Citibank have also put out a report around 3 months ago where they predicted by 2030 stablecoin issuance would go for, I think in a base case, 1.9 trillion and in a bull case to 4 trillion. So those two markets are definitely going to grow, and that's where the majority of both of those products live on Ethereum or its L2s today. From my perspective, I'm really interested to see how supply chain comes back into the fold, like audit trails, basically, that you can do on permissionless networks, especially with privacy coming into consideration now too. I think AI is another interesting area. Yeah, there's a few different areas that I think will start coming back into the fold. Yeah, that maybe private chains tried, but they weren't able to get to the effects that a permissionless chain can.
I think, as David just mentioned at the end there, like private chains, I think that we will see a continued move from private to public chains. And even if a permissioned or a environment with some control over it is required, it will be anchored to Ethereum and public chains, because then you have verifiable trust and some security guarantees when done correctly. So I think that that's the move that we'll continue to see, and looking forward to seeing it as well.
Perfect. Any other summary or conclusion that you want to share with the audience?
I guess I would say we're a relatively new team, and the reach of Ethereum and financial institutions globally is huge. We are always here for you to reach out to, whether you're a financial institution, a fintech, an enterprise with an interest in Ethereum. Please reach out, and we'd be more than happy to support you on your journey as well. The EF is here to support, and we are real and we are contactable. So also looking forward to seeing you all at DevConnect next week, hopefully.
Now is a really good time to catch us because we're here for the next 3 weeks. So yeah, lots of conversations to be had, and we'll be around for the next few minutes as well, so catch us outside. But yeah, thank you everyone for listening. Appreciate it. And thank you, Paula.
So, like a brief conclusion of the panel, I think that we have seen the current state of Ethereum. We are seeing a lot of institutions coming into the space, and they are choosing Ethereum as the main infrastructure to do so. It is true that we are lacking or we are missing from some regulators to give a valid recognition as a financial market infrastructure to Ethereum. We are seeing that maybe the next infrastructure would be based on Ethereum as a mainnet and giving scalability and privacy in the layers above. Also, financial institutions are using even a layer 3. We are seeing a lot of financial institutions and corporates moving to the private ecosystem, to the public ecosystems. And for the next 2-3 years, we are seeing stable coins and tokenized assets as the main use cases for financial institutions. So thanks a lot, David, Matthew, for being here in the panel. And for me, it has been a pleasure to moderate this panel. And see you next week in DevConnect, and next year in Madrid São Paulo in March, and in Madrid in October. Thank you.